we had this marginally steady, healthy ascending channel in the daily chart that goes back to July. And you can see it was reasonably reliable. I mean, still until now, it kind of is. And within this uptrend, we had an even steeper ascending channel that is guiding the current up leg higher. What we're seeing now is that we are reaching resistance. And we did get resistance from this peak here at 90.93, let's call it 91, and also the ascending channel resistance, right? So what I'm wondering now, especially with this red candle potentially forming and the market resisting, if we start getting like 1 or 2 red candles on the daily chart, I almost wonder if this here could turn into a double top. And this double top would then be triggered below 87.84, and then we would generate a big old target by simply measuring this distance, applying it towards here, and I'm sure this would lead us somewhere in the 85 area. So do keep an eye on that. And you can see already our preferred scenario was bearishness, so it would be super interesting to see if that's playing out. If you need any more evidence, we can see here that the momentum, this was the first price peak and this is the second price peak. Even though the price reached a similar level, the MACD didn't push to the same height anymore. So that means equal highs on the price, a lower peak on the MACD is showing me that the bulls have run out of steam, at least temporarily. Then I'm also looking at the stochastic and I can see we already put a lower peak in, so the market looks ready to move lower. Now this down leg here is, or this budding down leg, nothing is confirmed yet, is best traded not on the daily chart, because here we would be just hoping that the next candle is also red. For this, I want to go into the hourly chart because this is a lot more doable. So you can see we did break past a symmetrical triangle that's been in place since late October. Now we are pushing back inside this triangle again, and this support did not hold. So I kind of want to remove it tomorrow because it's not of great value anymore. So even if we move the symmetrical triangle, we are still within this ascending channel on the hourly chart. And here, the ascending channel support near the 87.5 could be super interesting, but this bearish confirmation would only come in steps. The first hurdle to take, or the next hurdle to take, is the 88.13. Now we are looking at how likely it is for the market to actually move lower. And for that, I'm looking at the momentum. We did get a bearish signal here, and we did see a strong decline here. So I think it's kind of okay to assume that the bulls have run out of steam. We see that the moving averages are pushing lower, the 8 and 12 exponential moving averages. So this is also showing us that the bullish trend has come to an end for now. Also, the stochastic is not even in oversold territory yet. So there is still some room to decline significantly before we can expect any sort of bullish signal. And with all these factors together, that's how we're getting our bearish assessment on the hourly chart, which is then pushing through to the daily chart with our bearish assessment here.